There's an old proverb that says, "It's always darkest before the dawn." But now that the dawn has arrived, some might beg to differ. Feels like it's been a long year already, and it's only February. We just narrowly avoided what was been dubbed as the dumbest trade war ever. And meanwhile, our government has been hanging on by band-aids and a prayer. So what does this mean for the real estate and mortgage industry? Well, hopefully we can help unpack that. My name is Vaughan Zawadzki. We're joined again by our friend and colleague, Tom Miocevich. And as always, the leader of the band, Sean Humphries. We're mortgage people. So yeah, well, again, it's like a long week already, and it's only Wednesday. Monday lasted forever. Sunday night felt like it was like back to March 2020 again. Not knowing what's coming. Our biggest ally and friend turned out to be a bit of a threat of a backstabber, and we're all kind of left holding the bag, trying to figure out what this is going to mean for our clients, what this is going to mean for our own mortgages, what this is going to mean for our real estate friends. Anybody with a thought?
Yeah, I mean, certainly so much has happened. That's a good analogy of feeling like the pandemic in a way. It kind of felt like I was glued to my screen for the most of the day on Tuesday, kind of similar to the when we had the truckers all going to Ottawa. Like, I couldn't take my eyes away from the screen. So much uncertainty going on. It is it's tough for borrowers to be able to get their hands around it. I felt that sort of same, oh, what do I do if somebody's going to ask me what I think the mortgage rates are going to be? It was different at 9 a.m. on Tuesday than
really
it was at 11, and then different again at 5 p.m.
Yeah, I mean, somebody released a statement that the Bank of Montreal had predicted if there were these tariffs put in place, they predicted the next 6 bank meetings would be 25 basis point rate cuts, bringing the overnight rate down to 1.5. I'm like, I didn't see like a retraction or, what happens now that this has been avoided for 30 days. Are we doing this again in 30 days? Was this 2 phone calls with our prime minister or our partyless prime minister with our pro-road government? You know what I mean? There's enough to make your head spin, and we're just mortgage brokers. You know what I mean?
Yeah, I wonder if these are all just threats. Like, even when it was introduced, these 25% tariffs, I was thinking, there's no way. Like, it just doesn't seem like there's enough time to get things in order, or even just to do the proper homework to see, okay, what implications is this going to have, right? And then he did it with Colombia, right? With the
trying to land an airplane of refugees.
Then he pulled that back, and then he spoke to Mexico and then delayed them for 30 days, and then he spoke to Canada and delayed us for 30 days. So I don't know if these are just threats. If he's trying to get some attention. Just a bully in a schoolyard, right? Just saying all these things that he's going to.
And the threats, this is supposed to be our best friend. This country is supposed to be our best friend, and certainly our biggest trading partner. We don't need threats like this. Like, we need stability. We need to get on with our day. He said on the weekend he was going to go ahead with it. And you're right, Tom. It made me think, like, what infrastructure would this even involve for the American government to cross the board tariff? Like, who's paying for it? How are they paying for it? Do you need to hire a whole team of people to process the paperwork? And like, I don't think you could even just flip a switch.
There's got to be contracts in place, right? If you're in the lumber industry and you're selling your lumber to a particular company, it's not like they're going to all of a sudden just say, well, look, we can't. We're not going to buy your lumber anymore because it's too expensive for us for the tariffs. But there must be some sort of contracts to say, look, you guys provide this amount of lumber for us for, the next 3 or 4 to 5 years, just like a fixed rate mortgage, right?
Exactly. Yeah. And so
if you renege on that contract, there's got to be penalties.
There definitely would be. And it like, I could just see it being a massive challenge because here, in Canada, Trudeau said the same thing. Well, we're going to counter tariff. Well, what does that mean? Like for anybody working at the customs office, I don't know what the paperwork that you have to fill out for tariffs, but there's a reason that we only tariff very few things. Like, certainly in Canada, we put tariffs on the U.S. dairy in order for us to support and maintain our dairy industry here. So there's good uses of tariffs because we don't want to lose our dairy farmers. But the U.S. can produce dairy cheaper. This is why we tariff here for dairy, but across the board, like it doesn't make any sense.
No, it doesn't make any sense to me. But we'll see what happens, I guess, in 30 days from now, and if it's extended another 30 days or for another period, then I think this is just Trump just flexing his muscle, and it's like, if you don't do this or if you don't do this, then we're gonna put these tariffs on, right?
For sure.
And it's just his way of threatening us, so that way we stay on our toes.
Yep, and I think that we'll get through it all. And in the meantime, I guess what a good move for Canada would be to see what else we can do out there in terms of either relying on ourselves and our own industry or make new trade partners. I think you're right. I think it's threats the whole time, but we really don't need it. I don't think that it's definitely not good for the U.S. Their cost of living would go up. I think that, potentially the biggest strategy that we could use here as Canadians is to just talk to the U.S. media, talk to the U.S. people, tell them how bad it is for them so that they can take it up with President Trump and say, yeah, we don't want these tariffs. It's gonna leave us all broke.
Yeah. No, it's definitely not fun times.
Hey, Sean's back. Good to see you, buddy.
Yeah, no problem. Sorry, guys. Yeah, so blue screen of death there, and completely went blank on that. Are we still talking about the uncertainty in the market right now?
Yeah, we sort of covered the tariffs and how terrible it would be for everybody involved, and that the big orange bully down south of the border could maybe chill out.
Yeah. Well, what I wanted to make sure I mentioned is, the roller coaster that we've been on when it comes to at least the fixed mortgage rates, or the pricing that the bond yields, which the fixed mortgage rates are based on. And the first red arrow there on the left, that's when the tariffs came out on Monday morning, and you can see how everybody flocked to bonds. They flocked to safety, and just went down. And then that first bump up after that, between the red and the green arrow, that's when Mexico got their 30-day reprieve. And then it wasn't until the end of the day where Canada was reprieved, and it's like, okay, there's no trade war, and people could go, take their money out of bonds and go back into stocks and into investments. And then the next morning, there's another dip because the U.S. job numbers don't look so good. They're down to a 4-year low in terms of job openings, and we're right back down to kind of sliding down. And today, at least as of 9:45, we're at 2.667, which isn't as low as it was when there might have been a tariff war, but still, the market is so uncertain right now. Buying Gaza is the next thing. It just seems like we're going to have 4 years of this roller coaster.
We're definitely going to have 4 years of the wildest news cycles, similar to the last time. And, the last time Trump was president, a lot of the news was like, below average quality news about how he misquoted something or mispronounced something or didn't fully understand something. It seems like this time around that it's completely changed, and they're actually reporting on the wildness that's actually going on. They're not just trying to catch him on his trip ups and stumbles, but he is over there, potentially talking about U.S. populating the Gaza Strip. I'm like, I can't even read it,
No.
Right? Yeah, it's like it's there's so many things coming at you. You almost have to choose, what is it that I'm going to react to? What is real here? What is just him talking, and what is actually something that's going to happen. I think people, and you can see on the bond yield curve, people believed that the tariff war was going to happen, or at least believed enough that they needed to keep their money safe.
For sure.
So
our
US
5-year fix and 3-year fix came down sort of overnight. Where do you think that that's going to go now that, we have 30 days of reprieve from this rhetoric?
Yeah, I think from their high of maybe where they were last week to today, maybe 25 basis points, 30 basis points down. Like, we're already starting to see some lenders drop below that. Probably start to see some lenders on insured mortgages, so less than 20% down, less than purchases of less than 1.5 million. Probably start to look close to a low 4, maybe starting something with the start of a 3.99 is possible in that realm. So
Yeah,
I think
I
that's
see
where
that.
we're heading. I don't know how quickly we will get there with all the uncertainty that's happened, but you can see this trend line, even over the last 5 days, is down. Which Tom, did you want to jump in on that prediction?
Yeah, no, I agree. I think that just with a lot of the uncertainty, a lot of people are heading towards bonds, and flooding the bond market will definitely bring the yields down. So with lower yields, we'll have lower fixed rates, and I think definitely 3.99 we'll see soon, and then maybe come late spring, it's just sprayed across the board. We'll see all fixed terms in that starting 3% range.
I mean, it's absolutely great for mortgages and mortgage holders, and it's great for us. It's going to be great for our real estate market as well. But it shows, we had all these predictions up until basically Monday, and this guy is definitely prepared to throw a wrench into all of the plans and sort of change the forecast. Because look, I'm having a little bit of difficulty wrapping my head around it, because we know when you pull certain levers that the market responds in certain ways. So if we had these tariffs in the US, it's going to drive up the cost of goods for the US, right? So that's inflationary, and we're going to experience inflation here, which tells you that there's going to be no rate cuts. Although, with the job losses and the softening of the market that it'll create, well, that would tell you that there's going to be rate cuts. So when BMO predicts, another 1.5 in cuts, and I'm thinking, like, where do we wind up with this, with these sort of opposing factors that are kind of contradictory?
Yeah, I think. Yeah, exactly. Like, what happened? What could possibly happen? I mean, like, the Bank of Canada lowered their economic forecast for 2025 and 2026, and they're not even taking into account a tariff war. They're citing lower immigration targets from the federal government, and they now expect the economy to grow at least at 1.8% instead of 2.1 or even 2.3% that they had previously projected. So at the same time, they've trimmed their outlook for business investments and exports, but interestingly, they've actually raised their consumption forecast. So what does that mean for the housing market? What do you think, like, if we were to describe a slowing economy, is that something that we're going to see, housing grow, or will it decline along if we're in a recession? Tom, what's your take on that?
Yeah, well, people are still spending, likely because of better wages and lower inflation. So, and I think housing demand might drop, but if the economy slows down enough and interest rates do go down to levels that we were talking about, making borrowing cheaper, then I think that we'll definitely see the housing market and other markets as well picking up. But policymakers definitely, they need to be careful when they're managing things like this to keep prices and growth stable. So
I definitely agree that that the real estate market is moving really more in correlation to where the interest rates are, and sort of less what the environmental factors are outside of it, because the pent up demand over the last almost 3 years now is ready to explode. So I think that it's going to be really sensitive to interest rates. If rates go up, we're going to probably see a more stagnant market. if rates go down, there are people that have been waiting just for that increase in affordability, that lower monthly payment. If that comes into place, then we should see the real estate market take off kind of as we expected it to, despite what might be happening to the overall sort of GDP and growth for the country.
I'm with you. I think that I hear a lot of people online saying that if we go into a recession, the housing market's going to go down. But I think it's the perfect cocktail for housing to actually take off again. Lower borrowing costs and a weak economy was exactly what we had during the pandemic, and the market went crazy. Certainly, there will be certain sectors, certain neighborhoods, or industry. If there's a town that's particularly tied to an industry, certainly that will have a declining factor. But if you look at a place like Toronto or Vancouver or any of the big cities, I don't see how we will see growth in that in those markets. Lower interest rates is like the catnip for home buyers. Like they're all over it. And people have solid jobs, union, government, those types of jobs. Those people will jump in the market if they've been holding off.
But then you look at our industry as well, mortgage brokers, bankers, real estate agents, home inspectors, contractors, right? So people are buying. Real estate agents are making money. Mortgage brokers are making money. People are then buying and renovating. Contractors are busy. Then, supply for building materials. Everything starts. It's just a snowball effect, right? So I think lower interest rates with housing demand and housing increase will impact the economy as a bigger whole than just people buying cheaper homes.
Yeah, I agree.
For sure. And lower interest rates are designed to spur the economy on. So, if that drives prices down for consumer goods as well, we get all that spending and all that retail to boot. And hopefully it pushes the economy up and we find some kind of balance where, we can't, the idea that housing will be affordable in our foreseeable future is kind of ridiculous. But if it's manageable, we will take it.
What are you saying, Vaughn? Like, you don't think it's affordable now?
Well, I think what I think this is going to be one of those times in our timeline where we're looking back and thinking, man, I should have bought in 2025.
Usually, right? We always look back and regret the investments. Like I wish that when I was 2, I bought my first property. I'd be a millionaire already. What was I thinking? I was going to kindergarten. I should have been buying houses.
Yeah, I remember the first house I bought, $250,000, and I thought that I was going to be in debt for the rest of my life.
Of course. Well, there might be some big opportunities because there's been big news for investors and business owners. Canada is hitting the pause on the planned capital gains tax hike. So originally it was supposed to take effect this past June. And there was a big surge of sellers and people trying to offload their investment properties, but it's now been pushed back to January 1st, 2026. That means that taxpayers will have more time to plan. But what should they do with this extra window? What would you do if you had a portfolio of rental properties and you were looking to maybe get off of some of those?
Yeah, if I owned rental properties, and that would be definitely a good time to decide whether to sell or restructure or refinance. If interest rates drop, then getting a good deal right now could definitely help. So the delay that's coming ahead is especially with these future tax changes. I think that if you wait too long, that you might get burned with the higher tax. So now it seems to be the time to restructure or to sell. And that, looking back at what we just talked about, now if you've got all these people are thinking, well, now might be the time to sell my rental property. I don't want to get extra. So now we're flooding the market with more inventory. So anyway, that's a different topic, but altogether. So
it does work hand in hand. Yeah, and I think that I would be very frustrated if I was in that situation. I'd be frustrated if I sold already in anticipation of this tax. Because the delay is, I think it's most likely it's a delay until the new government comes in and says, no way, we're not going to punish Canadians who were prudent and saved and invested in real estate, invested in this country. I was absolutely flabbergasted when the Liberal government even entertained the idea of this additional tax. And the smug kind of presentation by a prime minister when he delivered the news of why, thinking that it's based on some silver spoon philosophy, when I know a lot of people firsthand that really clawed and scraped, and while their friends were going out to nightclubs and drinking, they were saving up their money and they were purchasing investment properties, and then our government wants to punish them for doing the right thing. Absolutely ridiculous. So I think that if I had already sold, I'd be really annoyed. I'd be annoyed currently because of the uncertainty, especially because I would predict that this is going away, that this tax is never going to happen in the first place. But we already have this guy down south of the border that we have to worry about his unpredictability. Now we're worried about this unpredictability. We definitely are ready for some stability, so that people know what to do with their financial futures.
So I hear where you're coming from, Vaughn. I still think that it was a necessary move to make investment properties less attractive for people with money. It was taking stock out of the supply. We've got a supply problem right now, and we have people with multiple properties. And sure, there are people that scraped and clawed and did everything they could to buy a second property, but I don't think those are the people that were thinking, I'm going to sell, I got to sell right away, I got to get out of this. They're in a long-term hold position, and one of the risks of real estate is changing rules, changing tax environments. We've had it as the capital gains tax as high as 75% in the 90s, brought on by the Conservative government. So these things do change over time, and you should expect that different governments would enact that. If you were in a position where you had to get off of your properties and you had to sell, you've probably held it for a long period of time and you're ready to get off of that position, because there was most people were not going to hit that tax threshold that they were going to be that affected by it. But if you have just in the last 5 to 10 years gotten your rental property, you're probably not in a place where where the tax change would make any sort of difference. But making it less attractive for investors puts supply out there, makes it more affordable for people who don't even own one property, let alone the 3 or 4.
This also impacted people that were passing down generational real estate, cottages and whatnot to their kids. I mean, like when I first read about it, I thought it was ridiculous. I think it's ridiculous now. I think the best thing to do is axe it. I think that putting it on hold is like not so dissimilar to putting this tariff talk on hold. Like we just have to get it off of the table altogether, so we at least know what our next 5 years and then what the next mortgage term looks like while we're holding real estate.
Crazy.
Yeah, I agree. I think that they're going to axe it for sure. I don't think there's any government I don't think Mark Carney thinks, oh, that's a great idea, let's put that back in. Pierre Poilievre is definitely not considering this as an option. Like, can you imagine him bringing that out? Like, he's so much around
with the decline of foreign investment, just for other reasons altogether. I mean, we pulled a bunch of levers to try to slow down foreign investment, and now you can see what happened to our condo market. It's just sitting there stagnant because everybody wants to sell and get out. We just need the government to stop pulling so many levers so we can actually let market conditions sort of help dictate a more even flow. That's sort of where I'm at.
I don't know, but market conditions have led us to build way too many 1-bedroom condos for investors, and then not building enough supply for families and for people that like end users that would actually be able to live in them and take advantage for over a long period of time. We've only built things for investors. So I don't see how, I think that the tax, the threat of the tax and the foreign buyers ban, they've kind of done the job. I don't think they have to have the capital gains tax because investors are not jumping into these properties the same way. So I think it's done its job.
I agree.
All right. Well, I'm getting heated about that one. So let's
Pull up
move
the
on.
next scanner. What else we got in the
What
bag of
else
tricks
we
for
got
today?
here? So, well, another related topic here. So, uh, housing costs. Let me just bring it up here. So, housing costs in Canada aren't just squeezing buyers and renters, they're holding back the entire economy. So, higher prices in major cities are preventing people from relocating to places where they could earn more and contribute more. That means fewer workers filling high demand jobs, slower economic growth, and reduced productivity. So, this is according to the deputy chief economist at CMHC. This affordability crisis is an economic crisis. So, how bad is it? And what if nothing changes? What kind of position will we be in? But Tom, you got one on this?
Yeah, so I think if things don't change, home ownership will stay out of the reach. Will stay out of reach for many, and rents will just keep on rising. And what the solution? Well, you have to build more housing, improve public transit, and make sure wages keep up with living costs.
I mean, I love that. I think that we're both. I think we're all in line with that. We gotta build more. Definitely expanding public transit. We have to expand a lot as well. A lot of infrastructure. Doug Ford talking about new highways and stuff. We absolutely need them if we're going to continue to grow this city. My big concern with that is saying, well, if we have educated people that don't think that they can afford a property in Toronto, that's going to over time really change the landscape of what Toronto is. Now, the bonus of this is that if they're not looking at Toronto for a place to live and invest in real estate, then they're looking somewhere else. So as Canada continues to grow, it's definitely going to be helpful for either other communities, revitalizing other communities like, Hamilton could definitely use a bit of a facelift and a bit of a cash injection, and maybe a bit of a turnover. And so we would have more development in places like Hamilton, or brand new stuff, or stuff like expanding in Guelph, where like recently I've helped a lot of people move there. So we're going to see different pockets benefit. But Toronto may be a loser if we don't attract educated, talented people here because they're scared about the cost of living.
I think that people move to Toronto for more than just, or a big city for more than just the job opportunities. So lots of people I talk to are remote, or they only have to be in the office once a week, but they still choose to live in a city where there's lots of people, lots of culture, sports. Like there's a whole lifestyle that comes along with it. And you can move out to, I was talking to another guy who's thinking, I'm going to move to Minden because it's close to the off-roading that he likes to ride his Jeep on. So there's those things that draw you out there, but there's still, his wife has to go to work 2 or 3 times a week as well. So there are so people are torn between all sorts of different things. It really depends on the type of lifestyle that you want, because you can live in Toronto and pay more for rent than you would in Minden, but you're also then limited on the number of opportunities outside, social
For
opportunities that
sure.
you would have.
Yeah. Yeah. So I mean, like really what we want to look at is protecting diversity, and that could be diversity of different levels of education. So we definitely, don't want to be in any kind of position that we lose any of that mix. And I don't think that we will be. I think that Toronto is going to offer enough for young people, young talented people, that I wouldn't worry too hard about this prediction.
Yeah. Okay, another thing that I've come across here, and I'm gonna let me add this in here. So, new data from Edge Analytics, based on Bank of Canada figures, shows that 1 in 5 renters plans to buy a home in 2025. So, with affordability still a challenge and interest rates uncertain, will these buyers actually follow through, or is this just wishful thinking by real estate and mortgage brokers all over Canada? How would you describe the conversations that you're having with potential buyers right now, guys?
I think it's wishful thinking for sure. Like you can just imagine trying to rent a place in the city and save for a down payment. For I would think would be very difficult, unless the people that they're polling, have money coming through family or inheritance or something like that. But if you weren't in the position, let's say earlier this year or last year, um, what has changed? Like, sure, interest rates could come down and affordability can increase, but is it going to increase that much that people can go from renting to buying? I don't think so.
But I mean, how many I'm talking to lots of people that they're getting help from family, even just token amounts of help. I would say at least half, if I mean, just anecdotally, at least half of the people I talk to that are first time home buyers, mom and dad are going to kick in 25,000 or 100,000. Like they've got money. So they're being back end, invested into by their family,
Mhm.
kind of a living inheritance sort of
Can that
idea.
be market specific too? Like, will you get that mom and dad helping you out in different pockets in the GTA or in Ontario? Like maybe like with the last example in Minden, would you have parents in Minden um, with that extra savings to help out their child as opposed to on our market, Toronto, we have a lot of our first time buyers that are younger whose parents live in multi-million-dollar homes that maybe can afford to help them out, right? So I don't know if that's maybe pocket specific with parents helping out, but I can't imagine it's that much. Like the percentage of parents helping children is that high.
I think that anywhere sort of like an hour and a half to 2 hour drive in any direction outside of the outside of like Toronto core, let's say, those property values have all really increased. So if their parents got into the market when the market was low, their mortgage is paid off, their net worth is up, so they probably do have the help. If you go really far out there may be less help, but there are still pockets, like I think maybe is it Coburg or something, you can buy a house for 250K.
What?
So
No, you can't.
maybe it's not Coburg, maybe it's further out than that. But I was looking at it. I have a real estate buddy of mine who works sort of primarily outside of the city. Was showing houses like in that range. So it
Wow.
depends how far out you move, and then you don't need as much. When we had that sort of uh, high ratio mortgage for under 20%, 5% down, up to 500,000, we're thinking, yeah, well, that doesn't even exist in this market. But if the property value is 300,000, then you need a considerably less amount of down payment. So I think that it's viable if you're really going outside of the city.
That
If
makes
you're
sense.
Yeah, if you're within like a 2 hour drive range, then maybe mom and dad's got some money to help you out, and you
Oh yeah,
probably
that
need
makes
it.
sense. It's funny because I was in Tilsonburg a couple of weeks ago, and there's a for sale sign on one of the main streets, and the property looked like it was over 100 years old, a Victorian style home, 2-story, and it had a sold sign on it. And anyway, I found out it actually ended up selling for $329,000.
Does your back still ache when I hear this word, that
Right.
word?
So what Vaughn is saying, yeah, for 20% down on that is 70,000 dollars, and for parents to help out in those remote areas versus, let's say, $600,000 or $800,000 in Toronto, uh, maybe there might be some more equity that parents could help out here in the city versus out, like an hour and a half, 2 hours away. So to
Yeah,
Vaughn's
as
Yeah,
point,
but
much
if
as
that,
it
that
doesn't
definitely
make
makes sense.
sense, it does make sense when we actually dig into it. And hopefully, we talk pretty off the cuff about it. And hopefully, people's parents are able to help them out. And if they're not, hopefully they were able to do it on their own. We really want more Canadian stone homes, and we're pulling for you guys.
Yeah. Well, if your parents own properties, they've accumulated their wealth through owning a property. And I think a lot of parents would want to see their kids have that same experience. And I think that's why we see kind of an ease of that money transfer happening when you're purchasing a home. Because certainly most Canadians are not able to just go to their parents and say, "Hey, can I have $100,000 and I'm going to invest it into the market and I'm going to make lots of money?" versus, oh, I'm buying a home. This is an asset you can live in and feel and touch. People would be more attracted to, I think parents would be more attracted to offering that as, hey, I'm going to help you out to help you get ahead and get started, because they've had that same experience.
Yeah, I think that's astute. You're right. It's not just saying, "Hey, can we have this handout?" I mean, after the parents get over the sticker shock of what the housing market looks like these days, because I mean, we've all heard it a million times. The parents are like, "Well, there's no way that property's worth that." But after they go to a few showings, they realize that that is our reality. And I think that's really smart how you put it, Sean. That they believe in the real estate market because they've experienced the massive growth. So it's really good for the underlying real estate economy as well, that people believe in it and continue to believe in it.
The other group is people who are new to Canada and they're coming here and they're purchasing a home. And the Canadian dream, we hear about the American dream, but I think the Canadian dream is to come and own a property and own a part of Canada. Yes, it is expensive, but often when they're coming to Canada, they're the chosen ones from their family, and everybody behind them has kind of put everything they can to get them started and to leave their home country to come to Canada. And that's where we see a lot of the transfer of wealth happen there when it comes to purchasing a home, because they're the ones that are going off and having that success.
I concur.
Okay. I've got a couple more things, but I think we're pretty good in terms of timing here. Anything else you guys want to add before we jump off?
I feel good. I feel
Yep.
like I've vented. I feel like I put my energy in all kinds of places today, and hopefully, provided some clarity and to how to navigate these weird times right now.
All
Yeah, I
right.
agree. I think it's great. It's always great to be on the show with you guys, and like Vaughn said, just to vent out a bit about what's going on down south, and your perspectives on what's going to happen, what you guys think is going to happen with interest rates and the housing market. So it's always a good time. Thank you.
All right. Thanks for joining us, Tom. And as always, thanks a lot, Vaughn. And we will see you next week.